Good morning. Welcome to Trading Hour. It's a brand new week. I'm Reema Tendulkar. With me is Sonal Bhutra. And what a fantastic recovery, right? From Friday's low to today, the Nifty's added on close to about 1,000 points. It's the PSUs which are on fire. The Nifty PSC CPSC index will come up in the large cap space. It's ONGC, BPCL, BEL driving gains in the mid cap pack. You've got names in defense. You've got real estate names like RITES, RVNL, IRCON, PSU banks too are doing exceedingly well. And another pocket of strength is real estate, particularly the ones exposed to Mumbai real estate. So this whole political continuity, the expectation that the growth impetus will now be back. So Godrej Properties, Prestige, Oberoi Realty, all these stocks are looking quite smart.
Oh, yes. And, overall, the market sentiment is quite positive after what came out as a very stable result, right? People have been talking about the double engine government, but now there's more stability that the realtors are expecting as well, as per our conversation, and generally the markets as well. And there was an important flash as well at the bottom of your screen. We would like to address that because now there is a suggestion from Bloomberg that the Israel ambassador has spoken to the US and spoken about being very close to a truce deal. If that happens, even on the global front, there could be some developments. But, Reema, this is something that has been spoken about earlier as well. So unless it is actually executed and there is a finality, we don't know what happens here. But yes, this is something where Israel's US ambassador has spoken on the geopolitical issues. But as Reema pointed out, 1,000-point recovery from the lows on Friday that we saw, and a lot of moving parts in the Nifty as well. PSUs, of course, is one of them. The other one is Reliance Industries, because that's a heavyweight and that one is surging in trade. There have been a lot of reports last week as well on Reliance Industries. And today there is one more where Citi has gone ahead and upgraded the stock to a buy. They're quite bullish on the stock. They say after a period of underperformance, they believe risk and reward has become favorable. They expect an improvement in refining margin given in China's reduced export competitiveness. So globally now supply is being lower, capacity addition on the refining side is lower, and that is something which could improve GRMs. Jio is also well positioned to benefit from future tariff hikes, also from any moves to improve data pricing and monetize 5G as well. So Jio will do well according to them, which has been doing well already. And retail, which was seeing a lot of softness, that could continue for another few quarters, and it could lead to 1% average consolidated EBITDA cuts over FY25, FY27. But the other two businesses is something which could support Reliance's numbers, and overall they're quite bullish. It's a 3% uptake on a big weight on the index, and that is something which is supporting the gains on Nifty as well, Reema.
Indeed. Two of the other heavyweights which are, doing well, one of them is L&T and the other one is State Bank of India. And I remember this note that Nomura had come out in State Bank of India. They're bullish on it. Their target price is at 1,050 on State Bank of India. They say SBI has lower exposure to the problematic segments in unsecured retail, no meaningful exposure to microfinance, and credit card is anyway a separate subsidiary. Also, SBI's unsecured personal loans too are predominantly exposed to the salaried government employees, 83% of Express Credit book, and therefore it's held up well through cycles. So that's one of the reasons why Nomura has been bullish on SBI. Target price was 1,050 on account of the fact that they have less exposure to the problematic segments. Credit cards, etc., is a separate subsidiary, and that's been a big mover. But let's get to Vamakshi. MCX is in focus on the back of positive commentary from HDFC Securities. Vamakshi is here with the details.
Well, Reema, yes, the stock is surging in trade on the back of a note that came in from HDFC Securities. They caught up with the management of the company and they have highlighted that the company is now gearing up for the next phase of growth. And they believe that this growth will likely be driven by introduction of new products, rising market participation, as well as enhancing technological capabilities. Now, they further add that they have in principle not from the regulator for 1 weekly expiry per week foreign exchange, and this makes the launch of crude or index weekly expiry options a possibility. Now, they believe that weekly options is likely to scale up the notional volume for the company, but the premium to notional ratio will be lower. So therefore, maintaining equilibrium to avoid the loss of premium is crucial for the company. Now, over the past couple of years, the primary focus of MCX was on the technological transition. But now, from here on, they believe that the product and market development will be some other key factors that they will be watching out for. Therefore, the launch of mini contracts and the monthly expiry for gold options are steps that the company has taken in this direction. Given the meeting and the commentary that came through from the management, HDFC Securities also has given a few estimates that is expecting the notional and premium volume to register a growth of 58% and 43% CAGR from FY24 to 27 respectively. They're expecting premium ADTV to be at 3,802 crores in the third quarter. This is lower as compared to their 4,000 crore expectations earlier, and therefore this leads to a slight cut in their EPS estimates for FY25 and 26. Volumes, however, are expected to rise gradually for the company with scaling as well as launch of new products as well as the rising FPI and investor participation in commodities. So given those factors, HDFC Securities has a buy call on this counter. Target price is 7,000 rupees per share.
Okay, 1% higher on MCX. Thank you so much, Vamakshi, for bringing us all those details. The other stock on our radar is SBI Card, also buzzing in trade on the back of October credit card data. Abhishek Kothari is joining us with those details.
Well, for the industry, the credit card issuances momentum has been coming down of late, and it is down to 12.9% YOY and just 0.7% on a month-on-month basis. But look at the spends. The spends have grown by 14.5% on a month-on-month basis, which is one of the highest growth rate that you are seeing in last 10 to 12 months. So average spend per card is increased by just 0.12% YOY, but about 13.7% on a month-on-month basis. For SBI Card, the card issuances were better than industry average. Industry average was 0.7% month on month, but they grew by 1.1% month on month. Even the spends were better than what the industry growth rate has been at 14.9% on a month on month is what they saw the increase in spends. So average spend per card grew by 13.6% month on month for them as well. With reference to the market share, SBI Card has lost out market share on a YOY basis, but they have seen improvement on a month on month basis. So cards, that is total cards, market share is at 18.53% when compared to 18.46% in the previous month. And for spends, their market share is about 15.78% versus 15.72% on a month-on-month basis. So the monthly spends being strong in October has been liked by investors in trade today. Back to you.
Thank you very much for that, Abhishek. We will slip into a very short break. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
India is such an important part of AMD when we look across our, all of our, global portfolio. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. We spoke about equity markets, stock-specific action as well. It's time to focus on the commodities space. Manisha is joining us now, and we are focusing on crude oil prices. Manisha, up and away here.
Oh, well, yes. 5% of gains in the previous week. Well, of course, there's a bit of a profit taking right now, but we are trading on the higher side of the range, even with this bit of a decline that we are seeing in Asia right now. Well, few factors which have been supporting for crude oil prices. One, you have intensified conflict coming in between Russia and Ukraine. Two, US has imposed additional sanctions now on Russia's Gazprom bank there. So that really leads to some premium buying into the markets. So does the fact that the US has banned imports from 30 Chinese companies, and China is unveiling new policies. So we are looking at those demand numbers coming in from China. If you look at the month of September, October, even November for that matter, the China crude oil imports have been on the higher side. Also, if you look at the US S&P PMI data for the month of November, that has risen to 55. 5.3. So barring Europe in some ways, much of Asia and US, even Australia for that matter, seem to be showing better numbers, and that has been supportive for the crude oil prices. Add to that the fact that the dollar index is off its one-year lows. It's trading below 107. That has been supportive for many of these dollar-denominated commodities. There also is a report from Goldman Sachs which says that prices below 70 do not seem sustainable, and 70 to 85 of a range is what you could be looking at in sense of crude oil prices for the next 6 months.
Thank you very much for that. That's the big story, Manisha. We will slip into a very short break. We'll come back and talk technicals. We'll invite Vishal Malkan from malkanview.com. Stay tuned.
Welcome back. You're still tuned into Trading Hour. Well, one of the stories that we are tracking is what's happening with the city gas distribution companies. Now, we have been talking about how gas allocation has been cut second time in second month. That was a big cut. And MGL took price hike last week. And this time around, it's IGL which has gone ahead and hiked prices across its geographical areas. Now, this time around, it's around 1.5 to 4 rupees per kg in different geographies. But important to note that there's no price hike in Delhi. That is where CNG prices remain at 75.09 rupees per kg. Now remember, Delhi is around 70% of total volumes for IGL. So it is ahead of the Delhi elections that maybe the company has taken a pause and they will hike prices after the Delhi elections actually take place. But for now, it is something that the company has done, taken price hike only on 30% of its volumes, and they need to take a price hike of around 8 to 10% to pass on the impact of increased costs. But with this, apart from Delhi, the price hike has been only to the tune of 2 to 4.5%. So it's still less than what the street was working with or what is needed. But despite that, we are seeing that big surge in the stock price that at least the company is going ahead and hiking prices, and it will not impact their volumes for now. But it will be important to track, considering that elections are in, like, I think 2 to 3 months. That is when the real action will be seen, what happens after that, because 70% of their portfolio is still seeing the older prices.
Indeed. So that's about IGL and the other gas companies. Railways are on fire. We spoke about RVNL, IRFC, IRCON. All these stocks are up and about in trade. If you remember, in the last couple of months, railway stocks saw profit booking after a record rally and run in the stocks. So they went through a period of correction. Many of these stocks are significantly off from their all-time high levels as the market approach changed from being aggressive to a bit more defensive. I was reading somewhere, even the central spending of the government in the first half of the year is absolutely flat.
Yeah.
They have not spent any money, and now I think the next election is only next year in Delhi, etc. So they have their window to go ahead and start increasing the spending. So a lot of these capex spends, whether it's railway, defensives, these are stocks which are doing well. And today you've got order wins coming in for many of these railway companies. So I think RVNL is a stock which has won an order win from Eastern Railways. The size of the order, the project cost is about 838 crore rupees. And even for, I think, RailTel, there is an order win from the Central Medical Services Society. So one is this entire, so that's about these railway companies, order wins and plus a recovery after being beaten down quite a bit as the market sentiment has improved. Vishal is now with us for a quick technical check on the markets as promised. Vishal, morning. Thank you very much for joining in. What do you do, right? The market has hardly given anyone today an entry point. So at these levels, 1,000-point recovery from Friday and today, how does one trade the index, and what would your stock calls be?
Yeah, hi, good morning. I think the way market have behaved in the last couple of days, especially on Friday, it gave a big kind of a signal that it has bottomed out based on the patterns and momentum indicators. But today it was a gap up, so many people got surprised and there's no way to enter. The only way to do things are wherever you get an opportunity, especially stocks where there are multiple bottoms which have been retested, are the best picks on the radar. So Nifty looks like we have next resistance around 24,600, which could be an easy target in the next few trading sessions. And Bank Nifty, 52,800 to 900 would be the next target. The stocks which I'm tracking personally would be PFC, Power Finance Corporation, which is given a good breakout about that 480 levels. For stop loss of 478, we'd look at targets of 520 and 540 in the next few trading sessions. And second one would be B-Soft, which is coming out of a bottom at around 550 levels and tested that bottom for multiple times and showing bullish patterns. So I'll go with a stop of 555 with a target of 575 and 595 in the next few trading sessions.
Okay, all right. Thank you, Vishal, for joining in with your technical picks and the next levels to watch out for on the Nifty as well. But Parliament winter session will start today and Parikshit is joining us to tell us now what to track from this Parliament session. Parikshit.
Well, we have already seen ruckus in Parliament over the US indictment of Gautam Adani and others over a bribery scandal. The opposition has been wanting an adjournment motion. They want the House to be adjourned and they want a discussion on the issue. They want an explanation from the government on that to know what the market regulator was doing at this stage. The House had been adjourned for now. And we are likely to see a lot of chaos between the government and the opposition on this issue. The other big issue is the pollution in Delhi. The Congress has also given an adjournment motion in Rajya Sabha to adjourn proceedings and have a discussion on pollution in a big way. 16 legislations have been lined up for this winter session of Parliament. Notably today, the Finance Minister would be moving the bill on the banking law amendment. What this will do is increase the number of nominees for a bank account from 1 to 4. So that will be a critical law that we'll need to follow later in the day. We will also see a bill being moved in the Rajya Sabha by the Aviation Minister. This is the bill to replace the Aircraft Act. And what this will do is increase the ease of doing business in the aviation sector. So that's in the Rajya Sabha. Let's see how things go. The Prime Minister addressed the media earlier today, hoping that this would be a productive session of Parliament. There would be about 19 sittings in total, but it could be a stormy session of Parliament nonetheless.
Okay. Thank you very much, Parikshit, for that. That's the update coming in. Now, moving on to TIMSI, because sources tell CNBC-TV18's TIMSI that a tax arbitration mechanism is on the cards. So to explain what this means, why is it important, TIMSI is now joining in. TIMSI.
Are indicating to us that the government is currently considering mechanisms, including arbitration, to deal effectively with tax litigation. What we are given to understand from sources that the government may introduce an arbitration mechanism as an alternative to tax disputes in the upcoming budget for 2025. Currently, this proposal is under active discussions at various corridors of the government. Especially, the talks are on to create a special team dedicated to arbitration of tax disputes. Government is eyeing that the tax arbitration as a measure to improve ease of doing business in the country, and also once this arbitration mechanism is adopted, this measure will significantly reduce the burden of tax litigation backlog that is currently being faced by the Income Tax Department, to be precise. Apart from that, offering tax arbitration mechanism as an alternative will also help India match with the global best practices that its peers currently follow. Currently, countries like Canada, Australia already have tax arbitration mechanisms in place, and OECD is also advocating for arbitration as the preferred method for resolving tax disputes. So let's see whether Budget 2025 actually unveils an arbitration mechanism and a dedicated team so that these legacy and backlog tax disputes can be settled in a best way forward, something that we'll have to wait and watch for.
Okay, Timsi, thank you so much for joining us with all those details, but we have to slip into a short break. Up next, we'll discuss market fundamentals with Ajit Banerjee from Shriram Life Insurance. Stay tuned for that conversation. Welcome back. You're still tuned into Trading Hour. Let's talk about a CNBC-TV18 exclusive. Our colleague Yash joins us now with the latest he has on the role of ADA intermediaries and what he's picking up from his sources. Yash.
Well, Sonal, of course, the insurance regulator, IRDAI, had appointed a committee, and the intention of appointing this committee was to bring certain changes, certain amendments in the way intermediaries function in the insurance sector today. Which are these intermediaries? Any channel which sells an insurance product like banks, agents, agency networks, so on and so forth. What we've been given to understand is that after multiple meetings, the industry has certain feedbacks which it intends to give to the regulator in terms of how the intermediary channel can be reformed going forward and the changes thereabout. There are 5 major changes which I picked up from my sources. The first one is that the industry is expected to suggest an increase in the free look period. Now, what's a free look period? It's the period in which after buying an insurance policy, an insurer can opt out of that policy or port to another insurer for the same policy. What we've been given to understand is that the suggestion is expected to be increasing the free look period beyond right now, which stands at 1 month. Second one is allowing agents to tie up with more life, general and health insurance companies. Of course, the regulators allowed banks to tie up with 9 life, 9 health and 9 general insurance companies. That ecosystem is expected to be opened up for agents as well, as the suggestion on that side comes from the industry. The third one is no complex products to be sold through the bank insurance channel. Fourth one is to maintain video records of all insurance sales made by bank employees. And fifth one, removal of sales target as far as bank employees selling insurance policies are concerned, and action if any violation is found on that particular front. Some of these suggestions are very important in the context of what the finance minister and the IRDAI chairman recently made a mention of with respect to mis-selling when it comes to the bank insurance channel. So of course, these suggestions, if they come through and get approved, will also help address that particular point of mis-selling as mentioned by the finance minister and the IRDAI chairperson.
Thank you very much for that. Let's get to the markets and where we're headed from here. Ajit Banerjee from Shriram Life Insurance is now with us to talk about markets and the way forward. Ajit, thank you very much for joining in. I think the question now is, will this rally fizzle out? We've had 2 good days on the trot, or do you expect what we've what's played out over the last couple of days in terms of the election verdict can result in a more long-lasting, durable kind of a recovery in the market? Where would you stand on that?
First of all, good morning, Rima, and thanks for having me in the show. So I think much was expected, I guess, from the market after it almost fell down to 10%. That what would be the outcome of the election results? And since it has turned out to be, favorable for the ruling dispensation, and because a lot of, the underlying projects and all was in a work in progress status. So the fear was that what would happen if the government changes, then what will be the fate of the projects? And therefore the company is executing that. So now since, I think the election results have become favorable, so I think that has given a bit of a impetus to the market to actually, once again rally. Now the question is, whether this rally again is a short one, or we feel that this is the end of the low what we saw, and it is going to go up, going forward on a regular basis. Now my take on that is that I think this is not probably the end of it, in the sense that few things has happened actually, which has triggered this market correction. One was certainly in the run-up to the US election, what would be, which is the government which is going to come over there. At the same time, US dollars appreciating, so the US bonds, as a result of which there was a flight for safety which happened. And to add to that, it also compounded with the fact that, the earnings wasn't that good at all, and valuations didn't justify, the earnings which came out. As a consequence of that, I think we saw what we saw. Now, the silver lining is certainly, because structurally India's story is still, is strong. And we expect that it is going to be. There would be some minor, mean reversion in the process, as well as some, certain amount of, sanity which will prevail. As a result of which we are seeing all this. But I think this is, we can expect possibly, few more, key dates and the events to watch out for. One would be certainly the next, GDP numbers, which is going to get released on 29th of November. thereafter the RBI policy rates, as well as, ultimately once the government, new presidential government in US takes office, what is that finally they're, starting their policies on? Is that something what was mere a poll campaign also becomes a reality? I think there are certain things which moving parts which we need to, observe before coming to such conclusion.
Okay, so in that case, Mr. Banerjee, what are some of the sectors that you are focusing on right now? We've spoken about how government spending has been on the lower side, but second half could be better. Some sectors that you think are at reasonable valuations now after the fall that we've seen?
Hi. So actually, see, I think as I mentioned that there is no I think two way on it, that the government spending on the infrastructure, or rather the infrastructural spending in the country will slow down. It may so happen that the mantle which was primarily carried by the government in the preceding 3-4 years, that is something which might be now passed on to the corporate, the private sectors, and we are seeing that already. So actually, some data points I was looking at shows that there has been already around 6-7% increase in the capex allotment by the private sector, which is not a small number by any means, and therefore the sectors which looks bright at this point of time, connecting all the dots, remains certainly industrials. At the same time, the consumption sector. See, one data, very interesting set of data comes that the spend pattern of the Indian consumer sector has changed quite a lot. So just to give up a number to it, we have seen that in 2000 actually the household consumption spend on essentials was close to about 87%. Now the same number in 2022 has come down to 79%. And actually in 2030, it is expected to go down to 61%, and the rest would be taken up by the discretionary. So I think that is also something which we are seeing in the behavioral pattern, and also the sectors and the companies associated with that. So I think we are positive hotels and retail, all that stuff. At the same time, if the private sector capex as well as the consumption has to play, then certainly financials, without a proper support from the financials, it cannot ultimately get translated. So that is something which we are also looking at. And within financials, again, large size banks as well as large NBFCs or shadow banks, as we say, that is something which we are quite positive. At the same time, I think energy. If we have to, say, continue with such a mega scale of infrastructure as well as consumption, then energy is something which still we require. And it is not only the renewable energy, even renewable energy takes a time to shape up. But till that time, I think our existing energy, sectors will also require a good amount of investment. And that is something which we are certainly quite bullish upon, keeping in mind the way the India story will play out.
So industrials, consumption, energy, large banks, these are the sectors that you're overweight. But just zooming in on the consumption, the theme that you spoke about and how the consumption patterns have changed. The household spending on essentials has fallen from 87% in 2000 to sub 80% now, and it's expected to further go down to 61% by 2030. Yeah. So in the discretionary pack, if someone has to buy, keeping in mind a 5-year horizon, say till 2030, where are the pockets where the risk reward is favorable right now? How would you put any actionable ideas for our viewers?
So I think, what we are seeing, even if you, sub-classify that data further, we are seeing that the changes has happened significantly. Even, for example, if you look at auto, what we are seeing is that two-wheelers, within two-wheeler segment also, the high-end two-wheelers are selling quite a lot. So certainly, that is something which is finding a favor at this point of time, and this trend is likely to be. Even in the realty sector also, the consumption pattern of the households has been, in excess of say 1 crore houses and all, are something which is just, immediately getting, I think picked up as and when the projects are getting announced. So that is the trend which is likely to be there, because overall we are seeing that a good amount of increase in the spend pattern as well as the household income is also increasing. So naturally, these are something which is going to be, one of the focus. At the same time, within education, if you see, Education also, there is a good amount of tendency what we are seeing now to, offer the either the highest type of education in terms of, sending abroad, or even, the education, the cost of which has gone quite significantly up. That is also finding a flavor. At the same time, if you see in the jewelry pattern also, so in our younger days, we used to see jewelry was more of an unorganized sector, whereas now we are seeing a good amount of organized sector which is there in the jewelry, and actually, the volume and the performance speaks that how the trend is shifting. Similarly, if you look at the pharma sector as well as medical services, so healthcare services rather. So I think insurance, those are the things which will certainly be more, I would say, considered for consumption in the discretionary space, to respond to your point.
All right, Mr. Banerjee, thank you so much for joining in today with all those insights. It was an interesting conversation, but time for a short break. We'll get you more on the markets on the other side. Stay tuned for that.
Welcome back. The Adani indictment by the US District Court is creating fresh troubles for the group around the world. And here are some of the latest developments. A review committee formed by Bangladesh's interim government has recommended an investigation agency to examine the power agreement signed by the deposed Prime Minister Sheikh Hasina's government with different business groups, including one with Adani Group. Separately, we understand from news reports that a US agency is reviewing the impact of the Department of Justice bribery allegations against Gautam Adani and other executives on the agency's prior agreement to lend more than $550 million to Sri Lankan port development backed by the Adani Group. Back home, a fresh plea has been filed in the Supreme Court claiming the indictment order and the SEC complaint have unveiled malpractices carried out by the conglomerate. The plea claims the allegations raised are of serious nature and should be investigated by the Indian authorities. The Adani Group stocks too, however, are surging in trade today after last week's sharp decline.
Okay, all right, let's move on now. So that is one space which is doing well. The other space which is doing really well, which Rima spoke about earlier as well, is railway stocks such as RITES and RVNL. This is on the back of some order wins. Vamakshi is joining us with more details on this one. Vamakshi.
Well, good morning, Sonal. Let's first start off with RITES. They've received revised estimates for its railway electrification project from Northeast Frontier Railway, and the revised cost for this project stands at 532 odd crores as compared to 288 crores that we saw earlier. So positive out there, and resultantly the stock is surging in trade. But apart from that, keep an eye out on RVNL as well, because its JV with SCPL has received a letter of acceptance from Eastern Railway. This is for a project worth 838 crores. Now keep in mind that RVNL's share in this JV stands at around 76%. So going by that, the order amount that could be attributable to RVNL is at somewhere around 637 crores. Now this order is for works in connection with construction of multi-tracking railway broad gauge railway line, and the completion of this is expected over the next 36 months. So of course the order wins are boding well for both of these companies, but also there's some rub-off effect coming in from the Mahayuti in Maharashtra.
Okay, thank you very much for that. Moving on now, BSE along with 4 other Indian securities will now be a part of MSCI's Global Standard Index. Changes to the Sensex have also been announced, and Zomato is making its way to the Sensex now. Vivek is now joining in to tell us more. Vivek.
Well, that's right. An action-packed day as far as passive funds are concerned, given the fact that there has been quite a few announcements that have been made post-market hours on Friday. And also, remember, like you mentioned, the MSCI rejig, the adjustments will happen in the last hour of trade today. First, let's have a look at the Sensex, the changes that have been announced. Like you mentioned, Zomato comes into the Sensex, and this will be at the expense of JSW Steel. Zomato expected to see inflows of a little over $450 million, while JSW Steel is expected to see outflows of over $250 million. These are as per IIFL Alt Research. Now, talking about the FTSE, remember this particular review actually took into account IPOs as well as spin-offs. So two companies, Bharti Hexacom as well as Go Digits, are fresh inclusions to the FTSE indices, both the FTSE All World as well as the All Cap indices, and these stocks too will remain in focus. Now, coming to MSCI, like you mentioned, 5 fresh inclusions, and India will see inflows of a little over $2.5 billion. Voltas, BSE, Alchem, Oberoi Realty, Kalyan Jewellers are the 5 stocks that enter the MSCI Global Standard Index. And along with that, very importantly, HDFC Bank expect to see inflows of almost $1.7 billion. This is on the back of the second tranche of the weight increase being undertaken after the HDFC Bank merger. India's weightage in MSCI emerging markets now moves higher to almost 19.8%, second only to China. Action-packed day, especially in the last hour of the trading session, especially quite a lot of volume-backed action in these stocks. Remember, quite a few of active fund managers have already positioned themselves, and there could be some unwinding of their trades as well in the last hour.
Thank you very much for that. We will slip into a very short break. We'll come back with more on the market. Stay tuned. Welcome back. Markets have retraced a bit, about 70 points off from the session highs. The high today was 24,350. We're now at 24,280. But given the magnitude of the rally today, the 70-point dip is not very visible, but a little bit has come off from the day's high. But it's time now, as we wrap up on the show, we'll give you some market opinion that we got earlier today from Manish Sonthalia, Chief Investment Officer at MK Investment Managers. Listen in.
As things stand today, we are looking at a 10 to 12% sort of a growth in Nifty 50 earnings for FY26 that the markets can test. I'm not saying it will test. It will depend on a lot of things as to how earnings shape up and how expenditure happens and how demand revives on the consumption side. But it can come down to 22,000, 22,500. Now, the moot point is for a 12% earnings growth on Nifty 50, would the market be willing to give a 20p? Whereas the long period average of 10 to 12 years is 18 times. So the maximum margin of safety would happen if you were to extrapolate 1245 and multiply it by 18 times. That would be broadly 22,500. There's nothing to believe that their selling could abate even now because they have been selling across emerging markets. It's not one market preference over the other. It is basically money going to the US, and thanks to the change in regime in the US, you would see that massive outflows are happening from across emerging markets. It was so surprising to see Friday you had a net negative figure from the FIs in spite of very strong pullback and a short coverage. So infrastructure companies, etc., which have corrected 25-30% could be looked into. Still wary of the capital goods, power, infra, because they could be more sentimentally driven. But having said that, if you have hardcore numbers come through in terms of government spending, then obviously there could be a change in sentiments towards that. But I think valuations mostly are still quite prohibitive on the defense, PSC, railways, infra, capital goods, so to speak. And the other sectors where I think there could be a significant outperformance, and we are talking all relative numbers out here, could be your pharma, CDMO, your IT services coming out of a low cycle and spending is likely to pick up given that the US regime change would mean corporate tax cuts and more spending on technology. Those would be helpful for the IT services and obviously banking. These would be the preferred areas.
Okay, those were some preferred areas for MK outlining the strategy. The mid-cap universe is doing pretty well. The mid-cap index is up close to about 2%. The small-cap index too is higher. The advanced decline ratio is firmly in favor of the gaining side. With that, we're going to take your leave and trading off from the entire team. Thank you for watching.